Okay, ladies and gents, I hope everyone is well. Good evening, good afternoon, depending on where you guys are tuned in from. And welcome to the weekly market outlook call for the gold trading community. Okay, we got lots of information to cover today. It's a brand new month, which means there's going to be brand new volatility entering the market, brand new opportunities, but there's also equal risks that we need to look out for and definitely need to be paying attention to. So I'm going to be covering some key information about the economic news that's due to come out this week. And then Curran is going to be covering the market outlook for the currency pairs that we have on our watch list, as well as, of course, gold. I'm also going to be going into detail about how to manage your trades whilst they are in play. And this is going to be really important. I had a lot of questions on this throughout the week. So please make sure that you guys pay attention because it's definitely going to give you guys huge amounts of value. Now, as always, it's very important that myself and Curran let you guys know that we are not financial advisors and nothing that we share should be taken as financial advice. Okay, all the trade ideas are posted for educational purposes, and it's very, very important that if you decide to enter the trades, that you do so as per your own risk management. And also understand that trading is risky and you can lose your capital. So with that being said, let me share the screen so that we can go straight into the economic news that is due to come out this week. So let's start from Monday. This is set to UK time right now, I believe. Let me just refresh so that it updates. Okay, perfect. So Monday, we have very little happening in the Asia session, as well as London. Not much going on at all. At 2:45 and 3 p.m., we have red fold and news announcements on the US dollar. I don't expect them to be massively impactful, but they will create some volatility. Tuesday, let's take a look at what we have. So in the London session, we have CPI news coming out on the Swiss franc at 7:30. And at 3 p.m., we have JOLTS job openings, which is definitely some high impact news. So that's something that you definitely want to pay attention to. That's with regards to the US dollar. Wednesday, we have red folder news on the Australian dollar during the Asian session. That will create volatility with gold, as Australia is one of the biggest miners of gold. And then we do have a busy afternoon going into the London session. We have non-farm employment change news at 1:15 p.m. on the US dollar. And then we have the Bank of Canada giving a rate statement. They'll be talking about the interest rates, and that will create huge volatility in the market if those interest rates move dramatically. And then we also have a press conference on the Canadian dollar at 3 p.m. So Wednesday, pay attention to the Canadian dollar for sure. Thursday, we have red folder news on the euro at London Open. We also have unemployment claims at 1:30 p.m., which is going to be huge. And then we have a press conference on the euro at 1:45. So very, very busy hour at New York Open on Thursday. Friday, it is the big one. Okay, we have NFP. Okay, now for those of you that don't know what NFP is, NFP stands for non-farm payroll, okay? And as you guys can see here, non-farm employment change. Now, non-farm payroll employment change discusses the employment data in the US outside of farming positions, okay? So outside of jobs within the farming sector, everything else is included in the NFP employment news. Now, if you click on the data folder, you can get a little bit of information. As it says here, it measures the change in the number of employed people during the previous month, excluding the farming industry. Okay, so the usual effect, actual greater than forecast is good for the currency. Okay, what that means is that if there is less unemployment, okay, than previously or than expected, then of course that's going to be something that's positive and vice versa. So as you can see last month, okay, the forecast was that there was going to be 238,000 unemployed people. Okay, the actual data was 175. Okay, so that was actually negative. Okay, so pay attention because that is one of the biggest news announcements in the economic calendar, and it's going to be something that's going to create huge volatility within the market. Okay, so that is the market outlook. NFP is something that happens in the first Friday of every month, by the way. So that's the market outlook with regards to the economic news. Okay, now moving on, I want to talk about trade management. Okay, this is something that is really, really important. I had a lot of questions. Curran had a lot of questions. And understand that it's very difficult for us to answer these questions whilst we're analyzing the charts, whilst we're in the middle of trades. I'm sure you can imagine, if 80, 90, 100 people were all messaging at the same time, we will never get anything done. So please don't take offense if your questions are not answered. We do ask that any questions are directed to myself. Please avoid messaging Curran, okay? So please do not message Curran at all, okay? Any questions that you have, message me, because Curran is analyzing the charts, okay? And this is extremely demanding, it's extremely time consuming, and respectfully, most of these questions are not things that he can take his time away from to deal with, okay? So please direct any questions to myself and I'll get back to them, as soon as I can. Now, I want to talk about how to manage your trades whilst they are playing out, because the types of questions that I have in the last week were mainly surrounded around how long do I hold the trade for? Some of you gave scenarios where you held it for like 40, 50 pips, you didn't take any profit, then it reversed and it hit stop loss. A lot of you guys were talking about scenarios where you closed the trade after 50 pips and then it went on to do 200 pips and you felt as if you'd missed out. Now, what you guys have to understand is that the financial markets carry risk. This is the first thing, okay? They're very, very volatile. You cannot predict what the financial markets are going to do. You just have to respond to the analysis and the indications that they give you, and you have to practice risk management, okay? One thing that you can't do in trading is live with the mentality of what if. What if I had held that trade? What if I didn't take that trade? What if I did take that trade? Whatever you did is what you did, and you just have to move forward based upon that. But here's what I can tell you, okay? Now, number one, the trade is only invalidated if stop loss is hit. Okay, now we got into a gold trade. I can't remember where the stop loss was, but I'm going to have a quick look in the gold trading community now. So we got into a sell at 23.36. The stop loss was 23.42. Okay, so the stop loss was around here. Now, we entered at this point, okay, 23.36. Now, as you guys can see, this is on the 5-minute chart. Within around an hour, it had dropped around 90 pips. Okay, now this was exactly the same number of pips as we lost previously on a buy. Okay, if you guys remember, we got into a buy, I think at 49, and the market just completely sunk. I think it ran for 20 pips and dropped. Anyway, we recovered that stop loss here. Now, at this point, the market reversed, it went back to entry, and then it dumped again 160 pips. Okay, so overall in that move, there was a possible 250 pips up for grabs. It then pulled back again, and it is now potentially going to continue all the way to our take profit, which is at 23.06. So what could you have done in this scenario? Okay, notice could. The word is not should, because that depends on you. It's not what should you do, it's what do you want to do as per your risk management. Now, I believe that once the trade goes more than 30 pips in profit, this is considered a winning trade. Okay, the reason I say that is because when you're trading on order sizes that are going to be life impacting, okay, let's say that you place a 5.00 on this sell and you guys are going to get there. 5.00 represents $50 or £50 per pip. So I'm sure you'd agree with me that at 30 pips, £1,500 or dollars, that is a significant amount of money. And therefore, at 30 pips, that would be considered a winning trade. Now, you can take a number of decisions at this point, but what you can never do is never let a winner turn into a loser. So you must decide for yourself whether you want to take some profit out of the trade, and also you want to put your stop loss to entry, okay? Or you can consider putting your stop loss to entry. Now, there are different scenarios. Now, let's say that this trade runs for 60 pips and you decide to take 50% off of your order. Okay, you take half of your profits. So let's say you place a 1.00 and you manage your position and you close 0.5. You can actually leave your stop loss where it is. And because the stop loss is 60 pips and you've just taken 60 pips, because you took half of your order size, that trade is now risk-free. Even if it hits stop loss at the original stop loss, you lose nothing, okay? However, if you decide to now put your stop loss at entry, you've guaranteed yourself half of the profits, okay? Now, if it then goes back, reverses, and hits stop loss, you can then take a decision to re-enter. Now, some of you may say, well, if we're only going to re-enter again, what is the point in putting the stop loss at entry? There's a number of things. You may be busy and you might not see what's happening in the market. A news announcement may come out that you didn't account for that may cause a huge move, okay? But remember, when it says stop loss to entry, you have to put your stop loss just in front of the entry, okay? Because if you put it at entry, you'll lose money on the spread. So for example, if the entry is 23.36, I would put the stop loss at 23.35.6, okay? Something like that. That will ensure that you leave the trade in profit, okay? Maybe I won't look at it on the 1 minute. Let me look at it on the 2 minute. So for example here, you can see this is where your stop loss would now be, okay? So just in front of the entry. So if it does reverse, you'll get taken out there. And you can then take a decision to re-enter. Now, we can't tell you whether you should re-enter or not. That's up to you. What we can tell you is that the trade is only invalidated if it hits the stop loss, okay? So another strategy you guys can use, let's say for example that you have a 1.00 order size, you can split that into 4 orders, for example. So you could do 0.25 and set multiple different profit levels, okay? You could set one at 30 pips, you could set one at 60 pips, you could set one at 100 pips, you could set one at, 200 pips. It's down to you. And then you can have your stop losses for all at entry. Or you can use one position and you can manage the trade and start scaling off profits along the way. But it's so important that number one, you never let a winner turn into a loser. And number two, you manage all your trades the same. If you don't manage all your trades the same, you will end up losing money, okay? So if you don't manage all your trades the same, you'll end up losing money. So what most people experienced is that they used an order size for a trade that ended up using stop loss. Then they got nervous. They reduced their order size significantly. That trade ran for 100 pips and they were still in negative despite the fact that they've gained more pips. But because they reduced their order size so much, they ended up losing money. So keep your order size consistent, manage your trades consistently. If 30 pips is the number where you want to take off 30% of your profit, then do so. If 50 pips is that number, do so. But make sure you're doing everything consistently, okay? So this is really important. I believe it's something that's going to make a huge difference to everyone in their trades this week. And, I look forward to the week ahead, okay? So hopefully that provided some value. I'm going to pass it over to Karan and he is going to go through a market outlook. Make sure you guys pay attention because last week a lot of these trades moved on market open during Asia. And if that's the case, then you don't want to miss them. So let me make Karan spotlighted and then remove mine and then pass him the host function. Just bear with me. Participants. Let me find Curran, make him host. Oh, more, make host. Perfect, there we go.
Brilliant. Thank you so much, James. Very, very valuable information. Guys, I hope you all took notes because this information is what's going to pay you. Okay, so it's very important that you prepare yourself. A lot of work goes behind the scenes between me and James. All this information that you've just been given is all very, very valuable. You can always, as James mentioned, divide your total lot size to whatever you want to, and then take your first TP and then carry on from there, or just stop whatever you want to do. So it's really important that you took all that information on board. Now, today, I want to first of all tell you guys some very important information about what happened with gold and why 2339 was such a crazy area, and why in future we might see 2339 again, and what we can expect. Okay, so not just gold, all the other pairs do get affected by an area of not 2339, but the certain zone where gold was at. Every time anything, any pair, any commodity are at that level or at that zone, they will get affected. So I'm going to go straight into it. Let me share my screen. So I trade based on liquidity areas, zones, the direction of the market, and then the trend, and then most importantly, Fibonacci levels. Okay, I always really focus on Fibonacci levels. I try to follow them because Fibonacci is the main key to understand trading, and all traders out there, the professional ones, they know how significant Fibonacci is. Now, I wouldn't say that the entire market moved based on Fibonacci. There's a lot of other factors, but Fibonacci do tend to have a huge impact on the market. So 2339 was 60% recovery of a trend. Okay, once that sort of recovery is done, then market tends to do what exactly it did. And bear in mind, guys, anytime you're going to trade in future, when it's the end of the month, you got to be very careful. Okay, this has been mentioned numerous times in the past. Every time when it's the end of the month, you have to be a lot more careful as compared to any other time. The beginning of the month is a bit very quick, okay? The end of the month is very slow. It slowly does what it wants to. And on the last day of the month, that's when the real deal happens, okay? A lot of times, it might not do on the last day, it might do on the last week, which might be the beginning of the next month. But this time, it was the end of the month and the end of the week. So it was a very crazy day, and it was a very crazy week. Now, gold was at the 60% recovery again and again and again and again, because it was trying to figure out what is the next direction. Now, of course, from the beginning, we were thinking that it's going to not go any further in the downward trend, and it's going to carry on. But however, market does what it wants to do. That's why we have a stop loss. It's to make sure that our losses are stopped in a way that if the market goes against us, our trade stops. So we've still managed to catch 250 pips for the first trade. Then we call 100 pip profit. Then we had a loss of 80 pips. Then we had another drop of 50 pips, which turned back on Friday. Then it dropped another 160 pips. So there's a lot of opportunities in the market. And as James has mentioned numerous times, and even me, that you need to stick to the same lot size, okay? Because this is financial market, guys. We are competing against the best. So the Wall Street guys, the big investors, all these big companies, they've been doing this for years. Of course, we've been doing it for 5.5, 6 years as well, but they are there and they move the market. They can pump a lot of money in and they can do whatever they want. But we can't do that. We can't pump a lot of money in and make the move whichever we want to. So we have to make sure we follow what the big boys are doing, and we see what the market's doing, and then we follow that, and then we catch the pips. So the main goal is to catch the pips, and we've every week since the beginning of what we're doing, we've been always up for pips instead of losses. So that's the main key thing that you should all understand before you start trading. Now, this week, gold has, of course, broken a lot of zones, a lot of liquidity areas. The Fibonacci has been broken as well, and it's trying to drop down to the next TP of a downward trend, which is 2307, as mentioned numerous times. But we have to respect what the market wants us to do. What I would be careful of, if the market goes above 2333, then we will have to wait. We have to wait what the market does. We have to respect what the market does. Only then we will sell. Right now, I am not in a favor of a buy, not until 2339 is broken and it's gone above 2339. Then I will be looking at maybe buys, maybe see what the market wants to do and then go from there. But right now, I'm in a huge favor of sell. And I have a strong feeling when the market opens, it might drop straight down to 2307. So we have to keep an eye. It might not do straight away when the market opens. It might do tomorrow. It might do the end of the week. I don't know. We have to respect the market and we have to do at the right time when the right movement comes. So looking for a sell. It's currently standing at 2328. It can potentially go to 2333 and then it can carry on dropping down, or it can just turn around from here and just drop all the way 200 pips. 22307. So we just gotta have to wait, and then market opens shortly, and then of course I don't trade in Asia session, but as soon as London session, 7 a.m. London time, we will start trading again. So looking for a sell on gold currently. I'm not looking for a buy. If I do start looking for a buy, of course I will mention in the chat. Now the next thing is Euro USD. Very interesting position for Euro USD. Euro USD has been struggling to break through zones for a very long time. Okay. It has been exactly similar, very similar to gold. It has been trying to break zones, but because of the end of month, it took its time. However, we still managed to enter the trade and secure good 50, 60 pips in profit for Euro USD. A lot of you closed, a lot of you closed when it started dropping a bit, and it's completely fine. As James said, you need to have your targets, okay? You need to... me and James, we were discussing about this, and I did mention it to him as well. It's very important, guys, that you have multiple trades. Don't just have one trade, because then once let's say you've got 4 trades running in profit, 2 of them you can close them once they're in profit, and the rest 2 you can just move the stop loss or whatever you want to do. You do that and then let the trade do its thing. Because what happened with gold, it went back to the zone and it dropped 160 pips. Market can do that a lot of times, because the reason why that happens a lot of times, I'm a professional trader. I understand markets, okay? Just like how I understand, those big boys, those big banks, the big investors, they know how I understand. So they can manipulate the market at any time because they don't want to lose the money. When we are winning, they are losing. When we are losing, they are winning. So we want to be one step ahead of them, and we want to be smart. And of course, I always try to do that, but that's financial markets. You have to be careful. So Euro USD, we had a good day, and now I'm still looking for a buy on it. I'm still in a favor of an upward trend for Euro USD, but we have to wait and see what the market wants to do. Once markets open, we will see how it reacts. And if it does what I'm thinking it will do, then we will be buying it. And then the previous TP is still valid. It never went ahead anyway close to the stop loss. So as James said, again, up until the trade is not hit the stop loss, it's still valid. Okay, it's not closed. The market can go back to entry. The market can do whatever it wants to. But then up until the stop loss has not been hit, it will carry on the trend, just like NZD-USD. NZD-USD went up against our trade. 2 pips before the stop loss, is dropped completely down. So that's completely market manipulation. So we got to respect the market, and we got to do what the market wants us to do. Euro JPY is the next trade. I'm very in favor for a buy for Euro USD as well. It's trying to break through this zone, this area. This has been a very strong resistance in the past. Market has tried to break this area a lot of times, but it's been struggling. But however, the way the market's been acting now, it's covered all the gaps, it's covered all the areas, it's filled all the zones. It is a huge possibility that it can carry on going up. So Euro JPY, looking for a buy. The parameters will be shared in the channel once the zone that I'm looking for is broken, and then the TP and the stop loss will be shared for this. GBP and ZD. GBP and ZD, I'm looking for a sell. It's been, again, GBP and ZD is very similar to Euro JPY. It's been trying to break a previous zone, which is again 60% recovery of the market, and it's been struggling. It's been struggling over and over again. It goes there. Can you guys see? It goes there, bounces, it gets there, then it bounces again. Once that zone is broken, then only we decide if it wants to carry on the downward trend or it wants to bounce up and carry on the upward trend. So we have to wait and respect that. And once we get to that position, then only we can identify what we want to do. But I'm in a favor of a sell for GBP and ZD. The TP for this is 2.05718, and then the stop loss will be to 2.07157. After that zone's broken, we have all the confirmations, and then we enter for a sell for GBP. Very interesting pair this week. So this one is definitely going to make a huge move. So we want to catch this move, and it will be not just 10, 20, 30 pips. It will be good 200 pips plus move for GBP. So let's say stay tuned. USD JPY. USD JPY is an upward trend, trying to break a zone. I've given the parameters in the past for this. Of course, I will share it again. Once the previous zone's broken, and then it wants to move to the next zone. Of course, if it can't break the previous liquidity zone, we will wait for it to see and do what it wants to do. Then we will respect the market and go the same direction the market wants to go. Then the next one is GBP USD. GBP USD is a zone. Again, this is the same. It's been trying to break this. It broke it, started a downward trend, then it's again back to the same area. Once it carries on or gives a set direction, I am more in the favor of a sell for GBP USD. The TP for this will be all the way to 1.26567. So that sort of area is what I'm looking for GBP USD sell. We have to wait, of course, and then from Monday onwards, we will see what the market's doing. GBP JPY, it's crazy. Can you guys see this? This is not made up, guys. You know, nothing is made up. All the lines, all the zones, all the Fibonacci, everything is there for a reason. Look how it rejected the area that has been marked, and it bounced up and went to the TP. This was a brilliant trade. And then we're going to, of course, catch another trade on CAD JPY. I'll be looking for a sell on this because I do believe that it might carry on dropping down. It's been struggling to break above and carry on an upward trend, but we never know. A market does what it wants to do. So that's why I never ever say, because any trader out there that's telling you that's what's going to happen, he's just bluffing. We need to respect the markets, see what the market's doing, then go in that direction. I can't tell you what's going to happen in the next 24 hours. I have to see in the next 24 hours, understand where the market stands, see how certain the market is, what the confirmations are there, then we can enter. I don't want to just make things up, so I have to respect the market and see once the zones are broken, all the confirmations are there, then only we enter. So CAD JPY, looking for a sell. The TP for that will be, TP1 will be 114.828, then TP2 114.410. It might do as soon as the market opens, or it might not do it straight away. It might do it when London session opens or when US session opens, because CAD does get affected, and even JPY does get affected with New York session. So these are the trading pairs that I will be looking for the coming week. And it's very important, guys, that you always calculate and have all your week planned ahead. Okay, don't just. Of course, we are here to provide you as much support as we can, but you should be ahead of yourself as well. So that's all about the trades. Of course, the main pair is gold. Now I want to pass it back to James, and James will carry on with the rest of the information.
Okay, so thank you very much to Karan. Let me just figure out how I can take the spotlight back. There we go. Replace spotlight. Okay, guys, so thanks to Karan for sharing the trades and the market outlook. Last important thing is that with regards to gold, we've been trying our best to keep to, 40, 50, sometimes 60 pip stop losses. But when we've been back testing, we found that, there were a number of trades where if we had increased the stop loss to 80 to 100 pips, we wouldn't have actually got stopped out. Now, ideally, that's a much larger stop loss than we would like. However, with the volatility in the market right now and, the way that gold has been, sometimes it may be necessary that you will see an 80 to 100 pip stop loss. Now, if that's the case, what you'll see in brackets next to the stop loss is a number. Okay, so if it says 70, the stop loss is 70 pips. If it says 100, the stop loss is 100 pips. Now, if the stop loss is bigger, that means that there's more risk in the trade. Okay. Now, what you want to do is, significantly reduce your order size. Okay, so let's say that you're used to doing a 1.00 on gold. If you see a 100 pip stop loss, then what you can do is start with, say, a 0.25, okay? Now, let's say that we're in a buy. If the market drops 30 pips, you can enter another 0.25. This is known as layering, okay? And if the market drops again, then you can enter, for example, another 0.25. Again, this is known as layering. And as the market then picks back up, by the time it gets back to break even, you can move your previous stop losses to entry, or you could simply close the trade out in profit, okay? So there are so many ways that you can manage your trade, and it's very important that you understand how to manage trades effectively. So looking forward to a great week ahead. Thank you guys for attending the call, and we will see you guys on the charts when the market opens.